Welcome to County Office, your ultimate guide to local government services and public records. Let's get started.
How low can mortgage rates drop? Have you ever wondered just how low mortgage rates can actually go? It's a question that many potential home buyers and property investors are asking, especially in today's economic climate. Let's break it down together. Mortgage rates are influenced by various factors, including economic conditions, monetary policy, and market dynamics. Historically, the lowest average rate for a 30-year fixed mortgage in the United States was around 2.65% in early 2021. This record low was largely due to actions taken by the Federal Reserve during the COVID-19 pandemic. They lowered the federal funds rate to nearly zero and purchased mortgage-backed securities to stimulate the economy. Before this, mortgage rates had been gradually decreasing since the high inflation and interest rates of the 1980s. Typically, rates around 3% or higher were common in earlier decades. So, what limits how low mortgage rates can drop? First, we have the Federal Reserve's policy. While they can lower rates to nearly zero, they rarely go below zero because negative rates can lead to complicated economic issues. Next, we have inflation expectations. Mortgage rates often reflected anticipated inflation. If inflation rises, lenders will want higher rates to ensure they maintain real returns. On the flip side, very low or negative inflation could push rates lower, but only to a certain extent. Lender profitability and risk also play a role. Lenders need to cover their operating costs and the risks associated with borrower defaults. If rates drop too low, it might cut into their profits and discourage lending. Additionally, mortgage rates tend to follow the yields of long-term government bonds. If bond yields fall close to zero or even negative, mortgage rates may approach those levels. However, they usually remain just slightly higher due to additional risk factors involved with lending. In theory, mortgage rates could get very close to zero, but in practice, rates below about 2.5% for a 30-year fixed mortgage are quite rare. These rates are typically linked to extraordinary economic conditions. Rates near zero or negative are more common in short-term government debt rather than consumer mortgages, which usually have longer terms and higher risks. What does this mean for property research and real estate? Lower mortgage rates can lead to reduced monthly payments, which increases purchasing power. This can boost demand and potentially drive up home prices. When rates drop significantly, many homeowners choose to refinance to take advantage of lower payments. This can impact mortgage origination volumes in the market. Historically low rates can also stimulate housing booms. However, if rates rise afterward, it can tighten affordability, which may affect sales and prices. Real estate investors keep a close eye on these trends to assess financing costs and potential returns on their investments. In summary, while mortgage rates can drop to historically low levels during periods of aggressive monetary easing and low inflation, practical economic factors keep them from falling much below around 2.5% for long-term fixed mortgages. The future of mortgage rates will depend on the economy, central bank policies, inflation outlook, and lender behavior. Understanding these dynamics is key for anyone involved in real estate.
To learn more, check out these links, which you can click in the description below. And feel free to comment your questions. We're here to help.
Want the inside scoop on your neighborhood? Imagine knowing exactly what your neighbors paid or who actually owns that stunning house down the block. At countyoffice.org, you can create a free account and snoop through over 150 million property records, owner names, mortgage details, sale prices, all those things other sites make you pay for. Don't miss out on the fun. Just Google countyoffice.org property records or head to countyoffice.org directly and create your free account today. Go on, get your snoop on.